A federal banking rule tied to a specific dollar amount has just been locked in. And if you receive Social Security, a pension, or any type of government benefit, this change is already in motion and it directly applies to you starting right now. My name is Rasmus, and you are watching Rule by Seniors. Today, we're going to walk through exactly what this rule does, who it affects, and the specific steps you need to take to make sure your money stays fully protected and completely accessible every single month. And I want you to stay with me all the way through this video because some of the most important details come later on, and those are the exact parts most people skip. And skipping them could actually cost you money. Let's start from the beginning so everything is crystal clear. Federal regulators have officially finalized a new banking compliance framework, and at the center of it is something called a $250 monitoring threshold. This is now being applied by banks and financial institutions across the country under specific conditions. Now, before anything else, let me say this clearly and directly so there is no confusion. This is not a cut to your benefits. This is not a new fee on your account. This is not a limit on how you spend your own money. What this actually is an upgraded layer of financial protection that has been specifically designed to protect everyday Americans, and especially seniors, from a growing wave of fraud that has been targeting retirement income with alarming precision. Here's why this rule exists right now. Financial criminals have become extremely strategic in how they target older adults. They study deposit patterns. They know exactly when Social Security payments hit accounts. They know when pension payments arrive. And they often time their attacks to happen within hours of those funds being deposited. By the time someone notices something is wrong, the money has already been moved through multiple accounts, making it extremely difficult to recover. Regulators looked at this pattern very closely, and they realized that the best way to stop this problem was not after the money was gone, but right at the moment those suspicious transactions begin. That's where this $250 threshold comes in. So, what does this actually mean in practice? Banks are now required to apply enhanced monitoring to certain transactions that meet or exceed $250, but only under specific conditions that suggest unusual activity. Think of this not as a restriction, but as a smart detection system. It activates when something doesn't match your normal behavior. Your everyday spending, buying groceries, paying rent, covering utility bills, picking up prescriptions, none of that changes at all. Those transactions continue just like they always have. The system is not focused on normal behavior. It is designed to identify patterns that fall outside your typical financial routine. Let me give you a clear example so you can visualize exactly how this works. Imagine your account has followed a consistent pattern for months or even years. Your Social Security deposit arrives at the same time each month. Your bills go out in predictable amounts. Your spending habits remain relatively stable. Over time, your bank's system learns this pattern. It becomes what you can think of as your financial fingerprint. Now imagine someone gains unauthorized access to your account shortly after your monthly deposit arrives. They attempt to send multiple transfers to accounts that have never appeared in your history before. Each transaction is around $250 or more. That is exactly the type of activity this rule is designed to detect and stop before the money leaves your account permanently. Now you might be wondering, will this cause problems with your normal daily finances? For the vast majority of seniors, the answer is no. If your financial behavior is consistent, which it typically is when you are living on a fixed income, then this system will almost never interfere with your activity. It is specifically designed to flag unusual behavior, not routine spending. In fact, people with predictable financial patterns are the least likely to experience any interruptions at all. Let's talk specifically about Social Security because this is where many people have concerns. Your retirement benefits, disability payments, SSI and SSDI all continue exactly as they always have. Deposit dates do not change. Payment amounts do not change. Eligibility requirements do not change. This $250 rule does not touch any of that. What it does is add a protective layer once your funds are deposited into your account. That period immediately after your deposit arrives has historically been the most vulnerable time, and now it is significantly more secure. The same thing applies to pension income. Whether your pension comes from a private employer, a public retirement system, or a federal program, nothing changes in how those payments are delivered. Cost of living adjustments continue exactly as determined by federal guidelines. This rule operates quietly in the background, adding protection without interfering with access. Now let's step back for a moment and understand why older adults have become such a major target for financial fraud. The numbers are genuinely concerning. As banking has become more digital, criminals have adapted quickly. They use phone calls, text messages, emails, and even fake letters to create a sense of urgency. They pretend to be government agencies like the Social Security Administration or Medicare. They sometimes even pretend to be family members in distress. The goal is always the same: to get you to move money quickly before you have time to stop and think. Speed is the key factor in almost every scam. Fraudsters rely on urgency. They want you to act immediately, and once the money is sent, it is often gone for good. This new rule directly interrupts that process. By introducing a checkpoint when unusual transactions are detected, it slows things down just enough to stop many scams before they succeed. That brief pause can make all the difference. Now let's talk about what happens if one of your transactions is flagged. First, and most importantly, stay calm. This does not mean you did anything wrong. It simply means the system noticed something that does not match your usual pattern. Your bank will contact you either by phone, text, or through your online banking platform to confirm the transaction. Once you verify that it was authorized, the review is usually resolved quickly. Your money remains safe throughout the process. It is also important to remember this. If you ever receive a message or phone call claiming to be from your bank and something feels off, do not respond directly. Hang up and call the number on the back of your card. Never provide personal information to someone who contacted you first. For those of you who prefer in-person banking, nothing changes at all. You can continue going to your local branch, speaking with representatives, and handling your transactions exactly as you always have. This entire system operates behind the scenes within the bank's internal technology. There are no extra forms to fill out and no additional steps required from you. For those who use online or mobile banking, this rule works alongside the security features you already have. Things like transaction alerts, login verification, and activity notifications. Together, these tools create a stronger and more complete protection system. Now, here's something that deserves attention. If you have a joint account or if someone helps you manage your finances, the system will still recognize consistent shared activity as normal. However, sudden changes, especially involving new users or unfamiliar transactions, may trigger a review. If your situation has recently changed, it may be helpful to inform your bank so they have an accurate understanding of your account activity. There are also a few simple steps you can take right now to strengthen your own protection. First, make sure you have transaction alerts enabled so you are notified whenever money moves in or out of your account. Second, confirm that your contact information is up to date so your bank can reach you quickly if needed. Third, keep a basic record of your monthly expenses so you can easily recognize anything unusual. These steps may seem small, but they can make a significant difference over time. At the end of the day, this rule is about one thing: protection. Retirement income is carefully planned, and every dollar matters. Losing even a small amount can disrupt your entire monthly budget. Preventing fraud before it happens is far more effective than trying to recover money afterward. If this video helped you understand what is really going on, take a moment to hit the like button so more people can find this information. And if you know someone who could benefit from this, share it with them today. Here on Rule by Seniors, everything we do is focused on giving you clear, honest updates that help you stay informed, protected, and confident about your financial future. The financial world will continue to evolve. New rules will come. Systems will become more advanced. But your benefits remain secure. Your rights remain protected. And now your account has an even stronger layer of defense. This is not a restriction. It is protection. It is not a penalty. It is progress. And moving forward, you can feel confident knowing your money is safer than ever before.